A very good morning to our fellow friends and our lecturer. My name is Kobi Chin from Diploma in Finance. Today I want to present about the topic of macroeconomic. So this is my table content. So now I'm going to talking about the introduction. So first thing first is about the introduction of the traffic. The traffic is places by the one of the government on import of the goods and service from another. Also, the traffic are used to set the import limits. Besides that, for simply talking about it, they will boost the prices, the product and service from outside, and making them less enticing to domestic buyers. Also, the traffic are usually delivered by the country that import the commodity. And one server of the function, which is they will create the income for the importing country and economically. For example, the traffic will include the import duty on oil generated abroad or item produced slowly in other nations. And the last of the point of the traffic is about they will use import restriction, like the traffic imposed indirectly impact the exporting country since the home customer may avoid purchasing their goods owing to the price raise. Like if the domestic customer continue to prefer the import goods, then the tax will increase the consumer cost. So now it's talking about the introduction of the GST. So basically, the GST is about the essentially of government imposed taxing system, which is there is a single tax in the economy and that is levied on product and service provided. However, the GST is meant to provide a single comprehensive taxing system across the whole country for all commodity and service provided in the country. Also, the GST is the additional tax on goods and services used for domestic consumption and sales. For example, the GST is paid by consumer and remitted to the government by goods and service company. Then the GST is the most important and largest tax charged in the country. However, the GST is a specific tax exclusive to third party, which means the customer and consumer pay, then they pay more for goods. This GST tax is the integrity of specific product and service. Then the company will add goods and service tax to the product price and consumer need to pay original price plus goods and service tax is equal to the GST. Then the last point about it is the GST is applied by the company or paid to the government. So now is talking about how to quantify the traffic. So determine the tax and percentage collected at multiple stages of various goods and services under the GST system. They will have some percentage of fixed percentage, which is the 5%, 12%, 18%, and the 28%. And then the GST tax rate is applied to each category. So this is one of the examples that can help to clarify the GST calculation, which is if the item of service is sold at 500 and then the GST rate is at 12%. So the net price is determined like this one, 500 plus 500 times 12 divided by 100 equal to 500 plus 60. So the total of the GST calculation is 560 in these cases. So this one is the formula to calculate the GST for add GST, which is use the original cost times GST percent divided by 100, and then find the net price is use the original cost plus GST amount. When we remove the GST, we need to use the original cost minus original cost times 100 divided by 100 plus GST percent, and then when find the net price, we need to use the original cost divided by GST amount. And then below are the example we can reference for it. Also, we can using the online calculation method, which is this. We just put in the amount and the percentage, and then they will automatically count out the total GST we need to give and the pause of the GST amount. Also, can calculate the remove GST with the online method. So next is talking about the implementation of GST. First, we need to prepare the GST identification number, and then second, need to issue the tax invoice. Then third is the accounting of GST, and then next one is the input the tax credit. Also, number 5 is the GST refund, and last we need to pay in the GST and review between the 30 days of the GST result. For the additional information, the Minister of Finance will announcement the GST rate will reduce from 6% to 0% and start from 1st of June 2018. Then with the business tax annual turnover is more than 500,000, they need to register GST. If not, so they don't need lah. And then the business within 30 days need to apply the decreasation. And the last one is the accounting document. They need to put and keep for 7 years and written in English or the formal language. So this is one of the advantages of the GST, assist the government in the revenue stream rather than depending just on the income tax and petroleum tax. Also, the GST will not be a cost borne by seller and merchant. Export industry to become more competitive and more real in the time. Also, the GST allow company to reflect the tax that has been imposed immediately on the sales invoice. And the advantage is the straightforward and easy registration process. And the last advantage is the raise the registration. They hold not hidden tax with the GST. The advantage is the influence on the real instant market. When the price of goods or service raise, the market demand will decrease and raise the future in order to enhance income of the government. Also, the tax burden on SME, manufacturing, and the last one is the online payment system. For conclusion, the input tax charge at the previous level is always deducted by fund, and then the GST in Malaysia may be borne. Also, the GST in Malaysia is the not reality for the short and long term. Also, the consumer will buy goods at a high price when having the GST, and the government also reduce the burden of the various sector and make the Malaysian life more comfortable and secure. So this is the reference list, and thank you so much.